Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita, with me Sneha, and let's quickly have a look at what is happening in markets. We saw a bit of a spark after that rate cut. Let's pull up the Nifty. There you go, 0.5% higher. And within that Nifty pack, I'm curious to know what the contributors are, because really that's where the interesting piece is playing out. Financials are key contributors. HDFC Bank, Bajaj Finance, SBI are just some of those which are doing well for themselves. HUL, of course, lower largely because of the demerger. Let's pull up that HUL stock. And while that is one of the key losers of the day, but maybe not the right way to look at it, because it's obviously effective to the demerger. But that HUL stock obviously in focus. Outside of that, Interglobe is in focus, 1% lower. Shriram Finance is the top gainer along with the Bajaj twins, and understandably so, given the rate cut. Clear beneficiaries are those three, which is the NBFCs right off the bat. Outside of that, SBI is doing well. Adani Enterprises, Hindalco, HCL Tech are some of the other gainers in trade today. Let's look at the mid-cap and small-cap indices. Very similar texture, at least on the Nifty mid-cap index, 0.25% higher. So some positive bias there as well. Small caps, though, not doing as well. There is a clear divergence there within the small-cap basket. That sector, or rather that set of stocks is down 0.5% thereabouts. So the broader markets not exactly cheering that rate cut, and understandably so, because it's the larger names which benefit disproportionately, especially within the financials. And therefore, what you're seeing is on the advanced decline, it's not looking particularly pretty. 200 advances to around 250 odd declines on the Nifty 500 index. Indus Towers, SBI Cards, AB Capital, again, it's the same set of NBFCs which are doing well. Chola, Bajaj Finance, Finserv are some of the top gainers within that Nifty 500 basket. MTAR, Vijaya Diagnostic did very well in trade yesterday, 6% higher. We're seeing a sharp cool off today, given that move yesterday. Indigo Paints, Route Mobile, Easy Trip are just some of the big losers, along with HUL, obviously, the back of that demerger getting effective. Sneha, in terms of sectors?
Sectorally, very surprisingly, it's the day of the PSU banks. That is not surprising. But what is surprising is the resurgence that we've seen in IT stocks. That continues as dollar and that rupee trade still continues to be slightly weak, and rupee still under some pressure. Yes, we are below that 90 mark on the rupee versus dollar trade, and on the back of some positive comments coming in terms of liquidity injection by the governor earlier today. So that is positive. But yes, IT stocks doing well. PSU banks are the top gainers right now. SBI, Bank of Baroda, PNB, Indian Bank, Canara Bank. So you have financials that are doing pretty okay. NBFCs on the other side also doing phenomenally well for themselves. Take a look at something like an M&M Finance. That's up 5%. Chola Finance also doing very well. And some of the housing finance companies are also doing well. So that's the take on the financials. You have Nifty Metal, Bank, Auto, Realty stocks also, rate sensitive sector. So like the likes of Prestige, DLF, Signature Global, which is an affordable property player, also doing well. On the flip side, you have pharma slightly on the flat line, but under some pressure. Energy, FMCG and media stocks are not doing all that well. FMCG, of course, dragged on because of HUL, but like you mentioned, not the correct way to see it, because you have that ice cream business demerger impact coming in on the stock. So yes, that is the take coming in. But one stock to watch out for today has been Kaynes Technology. In fact, not even today. Take a look at the kind of stock move that we've seen from yesterday. The stock is lower by about 12 to 12.5% in the last two trading sessions as well. So yes, second straight day of slump coming in. It's important to understand what has happened over here. The beginning of the issue is that a Kotak Institutional Equities analyst flagged off that Kaynes Tech and its acquired subsidiary is Iskra Meco, which is a smart metering business, that's under scrutiny after large intercompany transactions and acquisitions that were not accounted for have raised some red flags in terms of the accounting. So really what the underlying issue here is, and what was flagged off as that there were related party disclosures between Kaynes Technology, their subsidiary Kaynes Electronics Manufacturing, and the acquired firm Iskra Emco for FY25. They didn't meet. Now, of course, these are all subsidiaries that keep buying and selling from each other, but what is visible in one subsidiary statements also has to reflect in the parent statement, and that has not happened. So yes, the details of the amounts will be on your screen. These are to the tune of 320 crores, which is one transaction, 180 crores, which is the other transaction, and the overall tune overall sum is to the tune of 500 crore rupees. Now, what the company has responded, they've said that this omission of 500 crore rupees has happened from the standalone statement. It was a mistake. It has been accounted for in the consolidated statement, and they've said that this is not done purposely. This is a mistake of omission. So that is what they're saying. They're saying that year-end payables of 320 crores to Keynes, 180 crores to the electronic manufacturing subsidiary, and 190 crores from Keynes Technology were eliminated in the consolidated statements on the of the Indian accounting standards, and they are going to be making disclosures to make this amendment into their statements as well. And remember, lastly, the Kotak analyst also flagged off that their borrowing cost is close to 18%, 17.7 to be precise. Keynes, the management has refuted this claim and said that borrowing cost is only 10% when bill discounting is included. So that is the clarification coming in from the company, but that clarification has not done anything at all for the stock. It still continues to trade under pressure, an 8% cut coming over there. So Harsh, Keynes looking very weak in a market that is overall cheering the kind of policy move we've seen today.
Well, yes. In fact, let's bring on board Rajesh Palviya, Head Technical and Derivative Research at Axis Securities, to talk to us about Keynes. Give us a view. Rajesh, before I talk about the index, talk to us about Keynes, because Snehi has just put out as to what's playing out with Keynes.
Good afternoon, Harsh. Good afternoon, everyone. So, looking at the setup for Keynes, it's damage on the long-term setup also. If we look at the monthly chart, this is the third consecutive month where stock is making now lower high-low formation, which is a sign of sustained supply pressure. And I think if I look at the long-term structure also, this is the first time happening that Keynes is making lower high-low formation for third consecutive month. Stock is now trading below to all its near-term, short-term moving averages. Stock has already broken down to its important support area of 5,200 on a decisive basis. So looking at the daily, weekly, monthly time frame, all suggesting that furthermore weakness we could see in this counter until the stock not able to regain above 4,900, 5,000 mark. So that's the challenging level for the stock on the higher side. So till stock is trading below 4,900, I think trend is likely to exhibit further on the weaker side. And now stock is trading around 45-70 kind of zone. So I think maybe in continuation of this down move, stock can further go down towards 4,300 or 4,250. That's the next level we can see for the Keynes Technology in the continuation of this down move.
Okay. And Rajesh, your call on the Nifty and the Nifty Bank?
Yeah, so Nifty has shown a strong recovery in today's session. Now we are comfortably holding above 26,100, 150 mark. So looking at the data setup, we still hold our bullish view, and we believe that the way Nifty is moving in upsloping channel on daily, weekly time frame, it clearly shows that yes, there is a sustained buying action is taking place. Nifty comfortably able to defend its 20-day moving average, which was at around 25,900. So that clearly shows that near-term strength is still intact in the Nifty. Yes, 26,200 is the key challenging level based on the call concentration. If we able to take out this 26,200 level, I think here we could see a short covering action to play out, and then further Nifty can extend its gain to 26,350, 400 also. So buy on dips would be the strategy at this juncture. On the downside, one needs to keep stop loss towards 26,050 to hold long position. For Bank Nifty, 59,000 is the key support area for this up move. Again, the similar kind of behavior upsloping channel is the structure on the weekly daily chart. So we believe that till Bank Nifty is trading above 59,200, 59,000, trend is also likely to exhibit on the bullish side. Possible rally towards 59,800, 60,000 we could see in the next couple of days.
Okay. We've been told that DGC has temporarily granted a one-time exemption to Indigo. Now, this is for their A320 fleet operations for night duty timings. This obviously releases some bit of the pressure that's come through, or pretty much all of the pressure. Exemption is set to be to remain valid till the 10th of February 2026. So you want to keep your eye out on that date. Also, the exemption will be reviewed every 15 days based on operational data and compliance reports. So this is a huge relief for Indigo. Suddenly the DGC has stepped in, given them that one-time exemption till 10th February. Stock ran up, has come back off. So you want to keep your eye out on that Interglobe Aviation stock. Do you have a view on this one, Rajesh, on Interglobe?
So we have seen this corrective move because of this news flow, and now stock is almost trading near to its important support area of 5300, which is very important for the Indigo to hold the strength on the near-term, short-term charts. So any breakdown below 5300 can attract more liquidation of position, but I think till 5300 is intact, stock will try to find out some buying action here, and maybe in pullback 5450, 5500 would be the immediate resistance zone for the stock. If at all stock crosses above 5500, I think then stock may resume its uptrend trajectory again.
On Interglobe. Back with closing trades, and you're still watching us on ET now. Let's take stock of the fundamentals of the market right now. Yes, we've seen a positive reaction to that MPC policy outcome we saw earlier today. So let's try and make more sense of that and the way the market has reacted in all of the sectors as well. We have Mr. Sudip Bandhopadhyay, market expert, joining us on the show. Sudip, hi, good afternoon, and thanks for your time. Yes, a 0.5% uptick on the Nifty is what we've seen. It's a welcome move by the street. But how sustainable do you think us being above 26,000 on the Nifty is? Because remember, we've had trouble holding on to that mark, and we've seen that fillip from the policy today. But how sustainable is this?
Well, I think we will have volatility in the foreseeable future as well, and the volatility will probably not be there. And decisively, we would have broken out of this 26,000 range only once we have a US-India trade deal. Look, what's happening? Domestic investors are buying, but foreign investors are still cagey, and they are not buying in Indian stocks. And either they are selling heavily or they are refraining from doing anything. That's the two kind of strategies they are adopting. The only time when the buying will come back is probably when we have a deal. And remember that domestic investors have been pouring money. So once the FII start coming back, I think we will decisively break 26,000. Also remember that FII holding in Indian equities is at all-time low. So there is significant scope for upward movement of the Indian market and the stocks. But that is contingent upon this trade deal happening.
Right, Sudip. Sudip, with regard to the rate cut itself, do you believe credit growth will surprise on the upside for FY26? And how best are you playing that theme? Because some of the NBFCs already run up, and we've further seen a bit of zing on some of those counters today. So how do you play that maybe over the next couple of quarters?
Harsh, I think what is happening is whenever there is an interest rate reduction by the central bank, the NBFCs do benefit disproportionately in the short term. The credit cost reduction pass on happens with a lag. And in the interim, the NBFCs benefit. For the banks, I think there is immediate margin pressure, which in the long run evens out and the credit demand goes up. But as far as short term is concerned, what's going to happen is definitely NBFCs are the beneficiaries, and that's pretty much getting reflected in what's happening in the market. As far as NBFCs are concerned, we have been positive on gold loan NBFCs for a very long time, and we continue to maintain our view. So both Muthoot and Manappuram, even at current level, is a buy from a long-term perspective. The housing finance companies, again, are a buy generally. Specifically, we like Canfin Homes. I think that's a good buy even at current level.
What about some of the Nifty 50 counters, Shriram or Bajaj Finance? Are those looking interesting, or post the run-up not so much?
Well, the valuation is a bit too rich, and I will be a little careful while buying into stocks at these kind of valuations. Look, they're quoting at around 6-7 time book, and I think for an NBFC, it's a very rich valuation.
All right. So with regard to the NBFC space, Realty, Sudip, is the other pocket which is doing well today. Let's pull up the Nifty Realty Index. The last I checked, it was doing fairly well for itself. Just pulling that one up. Well, Sudip, with regard to Realty, up around 1/3% thereabouts today. So you've clearly seen a cool off on that index. Do you believe that this rate cut can add some positivity to real estate? And what are the other ways in which you're playing the rate cut?
Well, I think definitely this is typically a rate sensitive sector. Whenever there is an interest rate reduction in the economy, realty benefits. They are benefiting. But today's excitement in the real estate counters is pretty much sentiment driven. I don't think there is any, immediate direct benefit. Yeah, eventually cost of funds for the real estate companies will come down. Housing loan costs will come down, will spur further demand and things like that. But these things gets played out over a period of time, not immediately. I think what is happening today is sentiment driven. As far as real estate is concerned, we do believe that we are in an upcycle. Maybe we are towards the middle of the upcycle. There is still more legs to the rally. And if you are a little looking at slightly longer term, I think some of the real estate companies definitely do look good. We do like DLF. We do like even Macrotech, Lodha developers. We do like Oberoi Construction. So there are a lot of interesting buys from a long-term perspective in real estate.
That's the take on some of the rates.
Okay, welcome back. You're watching Closing Trades here on ET Now. And, we have with us Rajesh Palviya. Let's quickly take a couple of technical views. Rajesh, firstly, thank you for being very patient and waiting by. Rajesh, give us your take. Some of these NBFCs are doing very well. A Bajaj Finance, let's also pull out a Shriram, a Chola and M&M Finance, which Snehi pointed out, up 5% in trade. How are these looking? A good trade at this point, maybe over the next week or so?
So Harsh, if you look at the most of the NBFC stocks are showing sign of strength, and most of the stocks are able to defend this 20-day moving average support area in this volatility. If we analyze on the Shriram Finance stock, clearly in uptrend, almost trading near to its all-time high trajectory, and the way stock has managed to give breakout of consolidation range on monthly as well as on the weekly chart, we believe that this is for little positional perspective. I think stock has potential to move further higher towards 900 920 kind of level also. So for Shriram Finance, buy and accumulate would be the strategy. On the downside, 820 needs to keep as a stop loss. Again, from the same space, L&T Finance is also looking attractive. Chola Finance is also showing sign of strength. So I think Chola Finance, if it manages to cross above 1740, also we could see fresh buying interest and then possible rally towards 1800 1820 we could see in the near term to short term perspective. So Chola Finance is also looking attractive. On the downside, 1685 needs to keep as a stop loss for buy and accumulate.
So that's the take coming in on some of the select NBFCs. But Rajesh, keeping it with the financials theme, what is your take on SPI? The stock looking very good today, a 2.5% jump for something like an SPI is big. Significant move over there, of course, reaction to the policy today. But your take on the charts for SPI?
So I think most of the PSU bank are showing sign of buying action, and SBI, yes, stock has shown a sign of recovery from the lower level, and now stock is negotiating with its 20-day moving average supply area, which is almost around 968 974 zone. So I think any breakout over 975 again can take this stock higher towards 1030 kind of level, and possibly stock can again regain its all-time high trajectory also. So overall structure is bullish. One can buy and accumulate SBI till stock is trading above 940. I think near term short term trends are on the bullish side only.
Okay, what about the likes of a Zomato, Eternal, some of the platform companies, Rajesh? Do you have a view on any of those?
Eternal is now almost trading near to its near-term crucial support area of 290, which is very important and crucial for the counter. If it breaks below 290, then we may see more, profit taking in this counter, and then possible down move can extend to 280, 275 also. But we have seen, multiple times stock has attempted to, shown some buying interest around these levels. So 290 needs to watch closely. If it's break, then one can open some short position. But if I analyze some the same like Swiggy again here, stock is showing a sign of bottoming out, but still confirmation is awaited. 405, 410 is the key level to watch for Swiggy. If it's manages to give breakout above 410, then here we could see good run up towards 425, 440 kind of zone. So Swiggy, one can keep on their buying list. At this juncture, 385 is key and important support area.
Coming in on some of the platform companies, Eternal and Swiggy, but let's get in a fundamental sense.